So hopefully you can see our paths system here on the My Work tab. Um, I have a quote already in here. We can just kind of shoot on through. I like to start with the auto first because I think in general you're probably in most quoting situations going to start with auto first. So you'll move, if you search and you're looking for a quote, you do want to go to the quote tab to search, and then we'll pull up Mr. Rusty here. So with auto, as this is coming up, we have actually two different products, and the system will automatically put you into the product that is going to best fit that individual. So we have our Signature Series, which is our preferred product, and we have our Choice, which is our non-standard product. The non-standard product is going to go in one of three ways. The first way is by if the person has no prior insurance. If they have no prior insurance, they will just automatically go into the Choice product. The second one, I'm going to give you two different numbers, and that's because we're changing the rule next week. So the other one is by credit score. So if today, if somebody has a credit score that's under 650, we automatically put them in the Choice. The system will automatically put them in there. Next week on the April 15th, we are actually changing that from under 650 to under 600. The big reason for that change is we started looking. We've had this product out for about 6 months now, a little over 6 months really, and we're noticing that almost 90% of the cases in Ohio were going into Choice solely because of credit score. There was nothing else that was warning them going into the non-standard. So we're dropping the credit score number down to automatically switch people over. The big hope is trying to put more people into that preferred product because credit score really shouldn't be the main driver for whether you end up in the non-standard product or not. The last one is regarding number of accidents and violations. So in our preferred product, in a 33-month period, you can have two at-fault accidents. You can have one at-fault accident, two not at fault accidents, and two minor moving violations. With the Choice product, that bumps everything up by one. So with the Choice, you can have two at fault accidents. You can have three minor moving violations, three not at fault accidents, and then one major moving violation. So like reckless op or DUI. So that is the kind of the last one that the system looks at and whether or not which product to place them into. So we'll go into our quote here we have. I will let you know up front, this is because it's a test quote, it ends up being a Choice quote because of the credit score. Using a fake person, you get a no hit on credit, obviously. So a lot of this first part should be pretty much filled in from using PL Rater, all the name of the individual, birth date, stuff like that should all be in there. The address. Has the insured lived here for less than 3 years? This box here is solely used for insurance score purposes. So as we're looking to get somebody an insurance score, we have a few different ways we look at trying to get that. The first, we match up what the current address, name, and birth date are and see if we can pull the report off of that. If for some reason we can't pull the report off of that, we look to see if there's a social security number in there. Social security numbers pretty much trump all other data when pulling the insurance score. So if there's no social security number in there, then we go to a previous address to try to match up name, birth date, and address again, just with something previous. So it is pretty important to have that in there if you can't get an insurance score any other way. If you can get one right off the bat without putting it in, don't waste time filling it in. You can just leave it at no and move forward, because there's just not a reason to waste the time doing it. This residence piece, you're going to see it's just, do they own a home, own a condo, own a mobile home, renting, multifamily, single family dwelling, lives with parents, something else. That is good just in the fact that if they happen to own something, whether it's a home or a condo, that gets placed into the rating factors, and it's an item like that where our multi-policy discount, especially on home, even though it technically is a 10% discount, starts looking like a 30% discount because of other rating factors associated with it. So you'll also notice a little red star next to it and next to some of the other items. These red starred items in PAS are ones you need. Those are boxes that need to be filled out to get a quote. Anything that doesn't have a red star next to it doesn't have to be filled out. The other easy way you can tell is you're looking at the screen. Blue boxes usually are right next to the red stars. They are stuff you need to be filled in to get a quote. Anything that's blank white doesn't need to be filled in. This next one, though, is probably one of the most important buttons in PAS, period, to be able to reduce frustrations on yourself, and that is the validate address button right here on the left-hand side. You'll just hit that, and this one's already passed, but either way, you would just hit OK. It'll run through. What it's looking to do is pull up the postal coding of the address, but if you don't validate the address and you get to the bottom of the screen and then hit your continue button here, it will just reload up this screen because it will not let you go forward without hitting that validate address button. So validate address is very, very important. Make sure you hit that button because it will save you a lot of grief trying to figure out what's going on with your quote. So it's just right here. AAA membership. Membership is, again, another one of these really important factors. As a AAA insurance company, we value the AAA membership and want to provide a very more special rate compared to just offering a basic associate or affinity discount that some other carriers have. So our AAA membership is actually in 3 different pieces for rating discounts and variables. We give a basic 5% discount if the person has a membership or if they're just bought a membership. So that's just a flat 5% regardless. We also give a longevity discount for how long they've had their membership. That longevity discount maxes out at additional 5%. And the way it works is 0 to 1, they don't get a longevity one. At between 1 and 2 years, they will get a 3% discount. And if they've been a member for over 2 years, they're getting the full 5% discount. The last part about membership is we have rating variables associated with the customer tiering for the total premium. And these membership variables end up accounting for a membership in good standing can give somebody a benefit of 2 higher tiers which, to give you an idea for what that means from a premium standpoint, that's roughly $400 to $500 less in premium by going up 2 tiers. So it is a really big, important piece from a total premium standpoint to get that full 16-digit membership number in there, because it can definitely save the insured a lot of money. There is a membership report that runs if you enter an entire membership number, and it will, that's where we get all of our feedback on the membership itself. Other AAA products owned. This is our multi-policy discount. For one reason or another, this is it's one of our better discounts, but it's one of the more unused discounts as well. I can tell you at the Ohio Auto Club, the average number of quotes with multi-policy on them is for auto is 28%. So yeah, this is a really important one. You see these little boxes. I've got the home checked off here, but you could do, if you got an HO4 for a renters or HO6 for a condo, you'll just click the box. And for these, you can do it unquoted. You don't have to find the policy, because in most cases, you probably haven't quoted it yet if you're starting with auto. And but it's a very, very significant discount, and it's definitely worth our product is really designed from a package standpoint to be packaged together. So the other one here, you'll see Life. While AAA Life is a different company from us, we do provide a 5% multi-policy discount if somebody does have a AAA life policy. So that's another way you can save on the multi-policy discount. Now, if you did already have a quote done in the system for home, you can search out and find that quote, so you don't have to manually enter as much information. It will just pull all the data since it's all in one system. But I said most cases you're probably going to start with auto first, so you're probably going to look at it as unquoted. Contact number, you just need to have one phone number out of the 3, and that's to bind. You'll notice none of them have a red star. You don't need any of this to quote, but to bind, you will need one phone number. And you don't need an email for anything, but emails are extremely helpful. The Ohio Auto Club actually participates in a marketing program where we send out emails to the insureds at renewals to remind them about their upcoming renewal and to be looking out for paperwork and highlight discounts they're getting and changes to their policy. So we do have a robust system for renewals that the club participates in, but we need the insured's email to be able to send them the emails regarding that. Current carrier. One thing I like to point out with the current carrier stuff, when you bridge info into current care from PL Rater into PAS, it is going to fill it out in this override pre-fill box. The reason for that is when you do run the current carrier information is going to show up in the main box here. This one shows none, again, because it's not a live quote, but that way, there are cases, and I'll tell you, this Southern Cal policy that I've got in here is a great example. Southern Cal doesn't report into current carrier. So if you had that in the main box, current carrier would have overwritten with the prior carrier to AAA Southern Cal. And then you would have had to just re-enter in all that information. This just saves you a little bit of time. And if for some reason you didn't want to use the override. If the current carrier is actually correct, you can just click no to override, and it will go with whatever the current carrier information is. The benefit with the current carrier information is the report is stored in PAS, so you don't have to provide any prior insurance proof. Anytime you're overriding the current carrier report, you do have to show proof for each year that you're saying that they had prior insurance. If you've got somebody that's had prior insurance, for 20 years with their last carrier, just put it in at 5 years and just get 5 years worth of proof. We have a discount that's associated with prior insurance. We give basically for each year that they were with their prior carrier, we'll give them 1 point of discount up to 5% total. So once you hit 5 years, you max out that discount, and our rating also doesn't change after 60 months. So 5 years, 60 months, you've kind of hit the max for what you can, what the person can save. Then you've got, again, most of this stuff should pre-fill in correctly between what you've put in from PL Rater and just what the system's going to do. The big thing I always remind people, starting here at channel type and going down to agent number, just make sure you are, it is you that is in there and it's your correct information and not somebody else's. The other thing I like to point out, this commission type, if for some reason you are doing a rewrite, you can put it in, you'd want to put it in as renewal. Kind of the same thing, source of business, you would want to do rewrite up here instead of new business. Now that is CSAA policy to CSAA policy. Of course, if you guys are writing something that was progressive and putting it into us, that would be new business either way, because it's new business on our end. This is just a rewriting one of our own policies. So not an agency rewrite, but a company rewrite. And you just hit that continue button. We'll move to the next tab. Before we get started on the driver tab, any questions on that first tab? There's a lot of info on there.
Not right now. I'm making notes though.
Cool. So here is our driver tab. We've got all the drivers we've got listed up here. You can switch drivers by just hitting the view edit button and moving through. So a lot of this again is going to come in. We do have, because Hank here is 17 years old. He does show the good student and distant student and smart driver courses. So he's eligible for a lot of our young driver discounts. With a good student, all you need to do is show a report card that's got the name of the child, the grade they got being whether it's a B or higher or 3.0 or higher grade point average, and the name of the school. That's all you need to show for proof. We've got some people even just show, schools now have apps where you can pull up your child's grades and they'll just do a screenshot of the app. I mean, it's the proof is not doesn't have to be an actual grade card. It can be anything that just shows those 3 items in there. Distant student is a discount for students. It's a heavier discount, larger discount, I should say, for ages 16 to 18. it starts to drop after the age of 18, but it's for your kids away at school, doesn't have access to a vehicle. So instead of taking them off the policy while they're away at school, this leaves them on, but it's like a 33% discount, especially for those 16 to 18-year-olds. It does, I said, it'll lessen. It drops about like 5% around there each year after 18, and eventually dwindles away. But the big thing there again is you got to be over 100 miles away from home and not have access to a vehicle. And the way we check the vehicle access is there has to be an greater number of drivers than there are vehicles on that policy. There are some exceptions that happen. I've seen, 3 driver households and have 3 vehicles, but the vehicles are, a minivan, just a regular 4-door sedan like a Camry, and then a Corvette. Most cases in that type of household, it's probably the Corvette is a fun toy for one of the parents and is probably not the child's. So if you got something like that, we do make exceptions to be able to get the discount. But, if we see something and it's the minivan, the 4-door sedan, and then a 10-year-old Honda Civic, that's going to make us think a little bit different, though. The Smart Driver course is the Adept Teen Smart Driver. There is info. You just go to the Adept website and pull up Teen Smart, and it will give you all the info. I will give you a warning if you call into our agent service team. There are 2 different courses going live in Ohio right now for Smart Driver courses. One club has their own driver training program, and they want their agents using that program. And sometimes our service people get confused and will tell you to go to the we'll give you a website for the Club Alliance driver program. You do not want that. Do not take that. You want Adept Teen Smart is the driver program that you guys are set up for. Automobile death benefit, ours is pretty straightforward. It's $7 every 6 months, and it provides $15,000 in coverage. Financial responsibility filing, the old SR22. I'm going to basically put it like this. If you got a choice policy, you can put on an SR22 all day long. If you've got a signature series policy, you will very rarely ever have underwriting allow you to put an SR22 on. You will need to, with the choice policy, call into underwriting to get them to approve the SR22, but there shouldn't ever be a problem with that. They've been instructed on all choice policies to allow the SR22 in. They are highly restrictive of the signature series, the preferred product, though.
Okay.
The other one we have is our user-based insurance program. We call our Smart Trek. It uses a mobile phone, a mobile app on your smartphone. It's the old track your driving, see how you do. There's a discount while you're participating in the program. It's a 10% discount. Our participation period is the entire first term. So I really suggest only using it for annual policies, but it's not the entire year because we take 2 months to renew a policy. So it's basically on an annual policy would be the first 10 months. On a 6-month policy, it would be the first 4 months. That's why I say the annual, because we need 3 months worth of data. It's a lot easier to get 3 months worth of data in 10 months than it is in 4 months. Especially, we've been a little bit, we were a little bit more lax last year, but as things are starting to change in the pandemic world, we've put the restrictions back on that, hey, you need to have a full 3 months worth of data to do this. People are driving more. I'm sure you've seen gas prices are going up again. And so but yeah, that it's a good program. If they score well, they can get upwards of 20% discount after the participation period when they move to their safe driver discount. We find that about 80% of people get between 10 to 20%. So most people keep their 10% or score higher or score a better discount with the safe driver discount. There is 10% of the group ends up scoring a 0, and anyone who scores a 0 ends up with a surcharge. Our surcharge is 15%. 1 to 9, you get that 1 to 9%. There's no surcharge for that group, but not a great discount either. But I want to show you too. I'm going to go back up to this individual, Rusty, at the top here. Paz is smart in the way that you see. He's 42, so you'll notice his. He doesn't even have those discounts. The teenager, the young driver discounts aren't even available. If he was over 55, we would have an additional discount called defensive driver. And that would, anyone who's over 55, it's a 5% discount, but so long as they take any state approved defensive driving course, and then, show you their certificate for proof, they can get that discount. The last of the drivers I want to show you is Dean here. And the reason for that, I have Dean as not available for rating. Dean has a terrible driver, and they've put him with a different company. So we're not putting him for rating. We don't want to necessarily exclude him because there might be a case where he might still end up driving the car, but he is insured with a different insurance company, so he's still listed on the policy. He's just not rated as he's insured with another carrier. That's the way we typically prefer to have is unless you got a odd situation where you need to have somebody excluded. We have a few different options here too. Rated on another AAA policy, insured with another carrier. Unlicensed spouse could also be like an unlicensed parent as well. So, if somebody has a parent living with them who isn't licensed, this way they can be listed on the policy because they're over the age of 15, but they won't be rated because of that. And of course, permit drivers would fall into this category as well. Now we'll get to our reports page. Above the current carrier, if we had a membership, there would be a membership report showing right here, and it would give you the same type of info, whether it was successful or not when it ran. If it's not successful, the biggest thing I suggest is going back and just double checking that the membership number you entered in is correct compared to what the true number is. If that's correct, it could be something within the AAA national membership system, which is had some issues in the past. And all you'll have to do is there's a spot right here next to where the notes and alerts button is, and it will be enter year since. So you'll just enter the year they became a member, and that way we can get the total years of membership for that individual. But you just want to, current carrier report, you want to make sure that ran successfully. Insurance score report, you'll want to make sure that ran successfully. This band number on auto, we do bands of 1 to 50. We have we find ourselves competitive in the 40 to 50 range. If somebody scores a 35 to a 40, that's going to be a little bit more hit or miss. And if somebody scores in under a 30, that is going to be pretty much unlikely that we're going to be competitive. Now, with the choice product, we have found that's a little different, and we have been a little bit more competitive in some of those lower tiers, but Signature Series, which makes up a large percentage of our quotes, pretty much, is where you're going to really want to be in that 40 to 50 range. And one nice thing too, you'll hit all the agree buttons, and then you'll hit this order report, and it will run all the reports at one time on the auto here. So you don't have to do everything individually. You'll just be able to hit order reports. You agree, and for the insurance score, customer agrees because of the Fair Credit Reporting Act, and it'll all run at one time, and you'll have to do each one individually. Then we get to vehicles. Again, just like with driver, you can switch the vehicles by hitting the view edit button. You get your information in here. They're all start off in blue, but just if for whatever reason you do not have a VIN number, make sure you fill in everything between year and body style. That's really important for us to be able to do a partial VIN as opposed to building its own symbol, which is a whole different thing and will cause a lot of headache for you. Other than that, most of this is straightforward. Your discounts here are all going to be based off the VIN. Ownership. If you got something that's financed or leased, you'll just put the company in here. We've got basically 20 of the most used banks listed in here. It's some of the large national banks, but it's also pretty much most of the car company finance arms as well. If you use any of the pre ones in here, you'll just select it and all the information is in there. If you select other, you'll have to manually enter in, if they got their thing done through a regional bank or a credit union, you'll just have to manually enter in the address for that, and then you'll validate the address. Then this forms page is really not used. So you get the premiums and coverages. Our choice product is only available as a 6-month policy, but Signature Series is a 12-month policy. Well, could be 12 or 6 months. You have the option with the Signature Series. You'll get to see a couple different ways you can see which product you're in. So once you get to this premiums and coverages, you'll see systems determine product to be choice. If it was Signature Series, it would tell you that there. The other way you can see is in the quote number. All of our quotes in Ohio start as QOH, but if it's AC, that is choice. If it's SS, that's Signature Series. So that's how you can tell through the quote number prefix what product you're in. Choice does max out at 100, 300 limits. Our Signature Series product maxes out for bodily injury at 1 million, 1 million limits. And that kind of goes down to property damage. You can get higher limits in the Signature Series product as well. Unfortunately, you probably can't see this, but when you do the drop-down box for each of the coverages, it's kind of neat in the way that it actually tells you, how much the person could save, or if you're putting higher coverage on, how much more that they'll spend on the premium by choosing that different coverage than what's already in there. Let's see, then got a few different options here for some additional coverages, and then there's a few things we'll cover that's only available in Signature Series. So we've got two coverages here, the loan lease, which is gap protection. Our gap protection runs for 3 model years, not 3 calendar years. So if somebody goes out and buys a 2019 car off a lot that's still sitting there, maybe I should actually, since we're in 2021, a 2020, that is going to run out in 2023, even though they bought it this year, which would make them think it should go till 2024, but it's by model year, not by calendar year. Same thing with the new car added protection. That is our 0 depreciation coverage. With that 0 depreciation coverage, it's 2 years. And again, it's 2 model years, not 2 calendar years. You cannot do both the gap coverage and the depreciation coverage together. You've got to choose one or the other. So you have to sit and talk with the insured on which one they want to do. The loan lease coverage, you can pretty much just do for about any vehicle that's within the last 7 years. The new car added protection has to be a brand new car that they just bought within the last 30 days. And you have to show, a receipt, a bill of sale, or something that shows it was purchased within the last 30 days. Then we will just hit this calculate premium button just to shore everything up. And I'm going to show you next to payment plans, there's this little triangle. If you hit the little triangle next to payment plans, you can see some of the payment plans available here. You got your quarterly, your semi-annual, which for a 6-month is going to be paid in full, and your choice monthly. I will tell you, we have a few other ones available here. If you do Signature Series, we basically have a paid in full. We'll have your semi-annual, so every 6 months. You'll have your quarterly, which would be once every. You'll get 4 pays in the year, and then you'll have 3 other options. You'll have 2 11-pay options. One will say low down, and one will say standard. The standard is 16% down, and then has lower 10 lower installment payments. If you select the low down, you're going to get a lower down payment, but you'll have a slightly higher installment payments for those remaining 10 payments than the standard pay does. The final one is we have a monthly, evenly broken out monthly 12 pay, which is what most people do. It's EFT. It's real easy, and again, it's 12 payments all split up equally. I think it comes out to be like 8.5% each month is what it roughly comes out to be, I think. But we have a few other, if you were in Signature Series as well, you've got a few other coverages that we offer and a discount. So one of the other discounts that's available is called E-Value. It is only on Signature Series. It's a 13.5% discount, so it's a really big discount. It's what I like to think of it as paperless plus. The paperless part is that they go paperless and they choose EFT or paid in full so that we're not sending them a bill on a regular basis. The plus side of it is they need to be a member to qualify for the discount. They need to have had prior insurance at 50/100 bodily injury level and keep 5,100 or higher limits so long as they have the discount. The other thing they have to do, which kind of goes along with the paperless aspect, they have to sign up on the My Policy website, which is a website for insureds to go to. They can print deck pages, they can print ID cards, do the little servicing things that somebody might want to do themselves. We do require they don't have to use it, but they have to at least sign up for it initially. But that again, paperless plus those few other little things adds up to a 13.5% discount, which is really big. The other two coverages we offer for that we offer for Signature Series is an OEM replacement coverage. So with our policy, if anything that's not tied to a safety system of some kind could be used for aftermarket parts if there's a claim. So, like wheel linings, for instance, we would use an aftermarket part. Even some body panels, not all of them, but, like a quarter panel on the front or rear might be something we might use aftermarket as opposed to OEM. With that coverage, we would only use OEM parts. So that's an additional coverage they can place on. The other big one is rideshare. So we will only do true rideshare, Uber or Lyft, where you're picking somebody up and dropping them off. We don't do delivery or food delivery or anything like that with it yet. The way ours works is if you think about the trip kind of split up into 3 different segments, you're got obviously, you're just personal driving and you're not even on the app. But once you turn that app on, until you find somebody as you're just searching through, Uber and Lyft, once you turn the app on, you're off your personal coverage. And Uber and Lyft have very low, they do state minimum limits, at least in Ohio. So they're 25/50 coverage for bodily injury. What we say for that period is we will act as secondary with your personal lines coverage. So if you exceed those 25/50 limits on the commercial policy Uber and Lyft have, you can use your own limits to, supplement it. So if you carry 250, 500 limits, you'll have the 25/50 the Uber and Lyft have, and then we will act in a secondary with your personal limits. But once somebody finds a rider and they're going to pick them up, and while they're taking them to their destination, Uber and Lyft have awesome limits. They're at 1 million, 1 million. So there's nothing really secondary for us to come in for. What we say for that is during that period, their deductible is pretty high. They have Uber uses a $1,500 deductible and Lyft has a $2,500 deductible. So what we say is you can use your own deductible, your personal lines deductible, and we'll pay the rest for whichever service you were working for. So if you carry a $500 deductible and you're driving for Lyft, you can pay the 500 and then we'll cover the other 2,000 during that period. So that's how the rideshare coverage works. It's pretty good coverage. I think the big thing with rideshare is just getting the people that do it comfortable enough that more and more companies in the insurance industry are starting to have coverage like this, and it's just getting them comfortable that this isn't pizza delivery. We're not scared of this. You can tell your insurance agent you do rideshare. It's okay. But that is kind of the last of all the auto coverage stuff. I guess the last couple things I should show you: driver activity reports. Once you're comfortable. Oh, yep.
I missed the part on the policy prefixes.
Oh, yeah, of course. Choice goes QOHAC. Signature series is QOHSS. The other little trick I'll tell you with the prefixes, if you drop the Q, you have the policy number. So the other thing I will tell you is that driver activity reports, you've got somebody, they like the rate, everything's looking good. Here's where you can run your MVR and CLUE reports. And then documents and bind. It'll have any information you didn't have. You only, again, need to fill out stuff that's marked with a red star here. If you don't have anything marked with a red star, that means you're good to go ahead with binding. Here we got the one insured with another carrier. It's going to want the policy number to put that in. We'd want the VIN numbers for these vehicles to be able to move forward. Then this is where you can select paperless. And then you'll hit purchase, and it'll open up a whole new tab. And that's where you can put in, if they want to do EFT, you'll enter in the down payment amount, and you'll hit buy, and it'll upload the policy. Couple things with that. When you hit buy, it does take the premium out of their bank account, or obviously if they're writing a check to you, it'd be it would definitely be happening now. But we do sweep within 24 hours if they give you a bank account number. So even if their policy isn't effective for 3 weeks, we still take it the second you hit that buy button. It starts the bank transaction moving. The other thing is you're going to see, to put in the down payment, 3 different lines. You'll see cash, check, and ACH. Don't ever use the check line because what the check line is assuming is that someone's going to write CSAA Insurance Group a check, and that's going to cause all types of problems when the money doesn't get swept out properly and such. So if somebody writes you a check, the best thing I can tell you to do is actually to make it an electronic check and do ACH instead of doing a check period. I think is the best way to go. But ACH is, you put the bank information in up at the top of the page, whether it's a credit card, savings account, checking account. You can put any of that information in up there and then pull it out of ACH. You can break things up if somebody wanted to do the down payment on a credit card, but their EFT payments on a checking account. You just have to put in both bank account information, but you can split up those 2 things as well. But that is pretty much auto.